The euro rebounded broadly overnight on building expectations that the European Central Bank would keep the policy rate unchanged at 0.75% this week. According to a Reuters poll, 67 out of 73 surveyed economists are expecting the ECB to stand pat. Though, forward rate contracts are still pricing in a 25 base point cut by the end of June. It's perceived that while the ECB has indicated openness to a rate cut, the decision will largely depend on the willingness of core Eurozone countries. German CPI rose more than expected to 2.1% year-on-year back in December, while Eurozone CPI also continued to stay above the ECB's target and was at 2.2% year-on-year. The stubborn inflation reading would probably tie the central bank's hands for cutting rates in Q1. There was also additional support for the common currency from news that former Italian Prime Minister Berlusconi won't run for the post again in February's election even if his alliance wins. Markets are cautious on the election results as the reform programs brought in by Prime Minister Monti's technocratic government are temporary and need to be replaced by formal laws. Currently, the central-left alliance leader Pierluigi Bersani is running ahead in polls, but relatively little was heard from him. In the U.S., the Bipartisan Policy Center said in a statement that the U.S. government will be unable to pay all of its bills as early as February 15. And it warned that, "We have less time to solve this problem than many realize, and Treasury will exhaust its borrowing authority and no longer have sufficient funds to meet its obligations in full and on time at some point between February 15 and March 1. Also, the policy group predicts that a debt limit increase of $1.1 trillion is needed to fund the government through the end of 2013. And another $1 trillion is needed for 2014. While the fiscal cliff issue, the tax part, was solved earlier this year, there are still much negotiations to be done between Democrats and Republicans on spending cuts and debt ceiling. Meanwhile, it's reported that U.S. President Obama is close to choosing White House Chief of Staff Jack Lew to replace Timothy Geithner as Treasury, and there would be an announcement as soon as this week. Trading volume in the Forex markets dropped back in December due to low volatility and a sluggish global economy. Average daily volume on Thomson Reuters dealing platform dropped 10.5% year-on-year to $102 billion in December. ICAP also reported that the average daily volume on the European Central Bank dropped 1.4% year-on-year to $91.8 billion in December. While December is traditionally a low month, the numbers would catch some attention when comparing to the figure of $274.2 billion recorded back in September 2008. Data from Australia saw trade deficit widen to $2.637 billion Australian dollars in November, bigger than expectation of $2.3 billion. The prior month's deficit was also revised higher to $2.433 billion. The 1%